All right, let's get into it. Wall Street closed mixed today as rising oil prices pressured the Dow, while tech stocks kept the Nasdaq in positive territory. So let's start with the Dow. It closed down about 29 points, or 0.8%. But first, let's talk about why the market is digesting these mixed signals. Well, that's because rising oil prices have reignited concerns about inflation. A barrel of West Texas Intermediate crude topped $85 today, a more than 2-month high. Oil's surge comes amid production cuts by major producers like Saudi Arabia and Russia. Now, higher oil prices could add to consumer costs through higher gasoline prices, which could weigh on spending, and they also squeeze profit margins across industries. Today, ExxonMobil and Chevron fell about 2% each as higher oil prices sparked fears about consumer costs and profit margins. So basically, it's a double-edged sword. At the same time, though, oil's rally has been cushioned somewhat by signs that global demand might be weakening due to economic uncertainty, which could help ease inflation concerns. Now shifting to the bright side, investors continue to price in a strong probability of a quarter-point rate cut when the Federal Reserve meets in September. This optimism is fueled by Chair Jerome Powell's comments last week that suggested a willingness to pause and assess. However, this could change depending on upcoming job market and inflation data. And speaking of inflation, July's personal consumption expenditures report will be closely watched tomorrow. It's a preferred measure of inflation for the Fed. Recent data suggests that price pressures might be cooling, but a rebound in spending could reignite those concerns. Okay, let's look at some key stocks moving the markets today. First, Tesla. Shares rose about 1% today, recovering some of their value after recent losses triggered by the company's decision to cut prices in China. The stock is now up over 70% year-to-date. Next, Amazon. Its shares edged 0.2% higher as the company's AWS cloud business showed no signs of slowing down, even in the face of competition from Microsoft. AWS continues to benefit from robust cloud infrastructure demand. Now, speaking of clouds, our sponsor wants you to know that there's a better way to invest in precious metals. They offer a range of innovative and affordable products that allow you to build wealth over time. Whether you prefer physical or digital gold, they have you covered. With the ability to invest as much or as little as you like, it's never been a more accessible time to diversify your portfolio with gold. Now back to the markets. Caterpillar shares bucked the overall positive sentiment, sliding 2.5%. The construction and mining equipment maker reported quarterly earnings and revenue that missed estimates. This miss was mainly due to supply chain disruptions and geopolitical tensions affecting the global economy. The company also lowered its full-year guidance, citing an uncertain demand outlook, particularly in the construction and energy sectors. Now let's turn to the international markets. Europe's leading indexes closed mostly lower. The UK's FTSE 100 bucked the trend, closing 0.2% higher. It was boosted by a weaker pound, which makes UK exports more competitive and potentially boosts economic growth. Basic resource and oil companies were among the biggest gainers. On the flip side, Germany's DAX edged up 0.2%, supported by gains in the auto sector. Meanwhile, France's CAC 40 fell 0.4%, and Italy's FTSE MIB dropped 0.9%. Over in Asia, Japan's Nikkei closed 0.4% higher as tech stocks rallied on the back of Nvidia's optimistic outlook. In contrast, Chinese stocks fell again. The Shanghai Composite Index declined 0.8% and Hong Kong's Hang Seng fell 1.1%. These declines come amid concerns about slowing growth in China and lingering geopolitical tensions between the US and China. All right, to recap, Wall Street ended mixed today. Energy weakness held back the Dow. Tech stocks supported the Nasdaq, and inflation data still looms large. Do you think rising oil prices could derail this market rally, or will tech continue to carry the load? Let us know what you think. Remember to subscribe to Profit Path for clear and timely finance updates every day. Thanks for tuning in, and we'll see you back here tomorrow.